JP Morgan leading the banks today after kicking off earnings season this morning, beating estimates along with Morgan Stanley, while Wells Fargo turned in a mixed quarter. And early next week, we will get results from Goldman Sachs, Bank of America, and Citi. Joining me now is Gerard Cassidy, Managing Director at RBC Capital Markets. Gerard, it's great to have you on. Mixed report, I would say, if you start to fold in the commentary we got on these conference calls, too, from the big banks we heard from today. Your takeaways?
I think mixed is a good word because we certainly saw some very powerful numbers in the trading area. Morgan Stanley and JP Morgan's equity trading numbers were up over 40% year over year. Investment banking numbers, believe it or not, on a year over year basis were good. They had a nice increase driven by DCM, debt capital markets. ECM was weaker. On the traditional commercial banking businesses, net interest income was mixed, as you point out. What was interesting also this quarter was that we started to see the banks build up reserves, loan loss reserves, not because of any credit deterioration, but for the accounting methodology called CECL, current expected credit loss accounting, which has to factor in the outlook for the economy. And as you can imagine, Morgan, the outlook today is a lot weaker than it was back in January.
Are the big banks a good harbinger of what we can expect through the rest of earnings season from the financials? And I ask that knowing that we do have other large entities reporting next week, but we also get regionals, and you could make the argument that they're maybe more sensitive to the U.S. economy specifically.
No, that's a good point. And I would say that when you look at, what's on tap for next week, we're definitely going to have the regional banks reporting en masse, and as well as a couple of the big banks, as you already mentioned. And what's going to be interesting is what their take is on commercial lending, because that's where the real uncertainty is today. The consumers, the credit card growth continues to be decent. Auto loan growth was good as well. But that's not the real place where the regionals see their loans. Their loans are primarily dominated in the commercial space. So that will be a better reflection of the uncertainty out there. But that all being said, the steeper yield curve is positive for net interest income, and that's very positive for the regional banks.
So what would you be buying right now, if anything?
Yeah, I think, after today's results, we still believe Wells Fargo is a place investors can go. And the reason being, as you might remember, they have the asset cap with the cease and desist order. We expect that to be lifted this year. And it was very apparent today that with the growth that the other banks were able to show, it held back Wells's numbers. So once that asset cap is lifted, that should be very positive for them. We'd also look to own Bank of America, who's going to see some of the numbers that JP Morgan saw today in capital markets as well as in the commercial banking businesses.